Everyone, welcome to this edition of Executive Interviews on Tech Investment Insights. Today we'll be speaking with Matt Bartoloni of State Street Global Advisors. State Street currently is an investment management company with over $2.7 trillion in assets, and we're very excited today to speak with Matt, who is a vice president and head of SPDR ETF Americas research at State Street. And so thank you so much, Matt, for joining us today. What is your
Thank you.
role? Yeah. That what is your?
So,
I was
so
gonna
yeah,
say, yeah.
my
Go ahead.
role at State Street is basically, I'm the head of research for our ETF business here in the
Mm-hmm.
Americas, and my role and my team is really to inform and educate investors on the ETF business, as well
Mm-hmm.
as provide our insights into market trends, as well as provide our market commentary to make sure investors can, have all the relevant information before making that decision. So
Mm-hmm.
we provide market commentary, thought leadership, as well as
Mm-hmm.
ideas around portfolio construction and what ETFs can do for you for your portfolios.
Mm-hmm. Well, sounds very exciting, and certainly with many investors looking for direction in the market right now amid the volatility of the past few months, I think a lot of people will certainly be looking for those kind of insights. And so, on that point, actually, so the markets have been relatively stagnant and very volatile, especially domestically, these past few months compared to 2017, where we saw a relatively easy and straightforward rise. Why do you think this is the case, and where do you think the market might be headed over the remainder of the year?
Yeah, in a recent research note, we put it as, the market is climbing sideways, looking for the next catalyst to move higher. And a lot of that has to do with some of the catalysts that were driving the gains in 2017 and then in January to start the year have somewhat waned. So we might be at
Mm-hmm.
this part of the cycle where it's maybe a peak earnings growth and peak coordination. So
Mm-hmm.
earnings growth has been really strong for Q1, but you started to see 4 out of the 11 gig sectors have lower growth in Q2,
Mm-hmm.
and essentially 10 out of the 11 gig sectors have forecasted growth within 2019 to be lower than when it was when we first started reporting earnings in Q1. So there's sort of
Mm-hmm.
a downward revision trend going on. So this idea that the market is, this is as good as it gets is sort of starting to grip hold. At the
Mm-hmm.
same time, we're sort of might be past this idea of peak coordinated global growth, and that has introduced some near-term negative sentiment from headline perspective, whether it's trade or
Mm-hmm.
geopolitical risk. So I think the market's trying to find its footing as we head deeper into Q2 and towards the summer months.
Mm-hmm.
Earnings might be one of those, but still you're going to start to have these normal volatile events that investors have to withstand.
Mm-hmm. Yeah, certainly earnings always send the market into whatever direction, and certainly so for the remainder of the year as well. So a lot of people now are worried about the potential impact of things such as tariffs or now high oil prices. What do you think are the biggest risks in a particular to the markets in the upcoming future?
Yeah, I mean, so I think we're definitely getting more into this late cycle environment with higher inflation, clearly higher rates, a stronger dollar has also coincided with this. So we're
Mm-hmm.
starting to see, to your point, with higher oil prices, we're definitely seeing investors allocate more towards energy related segments of the marketplace as well as materials because you're having those higher producer prices. And that has,
Mm-hmm.
obviously impacted some firms like industrials, to your point around tariffs. Those industrial type conglomerates will have to
Mm-hmm.
incorporate that into their margins, and that has led
Mm-hmm.
towards from an ETF perspective, we've seen outflows within industrials and inflows into energy. Looking ahead of sort of the risks to the marketplace, clearly geopolitical risk and the midterm
Mm-hmm.
elections within the U.S. is likely going to drive a lot of that narrative, come this fall. But I think the idea of political gridlock is something that we've somewhat come accustomed to, and so I think that might be a little bit of a head fake for the
Mm-hmm.
marketplace. I think the biggest risk for investors to appreciate is what's going on within the yield curve. So if
Mm-hmm.
we're thinking about a policy mistake or policy risks, it
Mm-hmm.
might not be coming from the fiscal side of the house, but more monetary. If the Fed does hike too harshly, where it sort of chokes off growth, I think that's probably the risk. And one of the biggest things we're looking at is the yield curve.
Mm-hmm.
Does it continue to become inverted? Because you're having this, basically rate hikes at a time where the output gap is starting to get closer to zero. So I think that needs to
Mm-hmm.
be really weighed heading into the end of the year, and that's why we think investors focusing on the short end of the curve from a fixed income perspective has been something that you want to
Mm-hmm.
consider.
Mm-hmm. Yeah, very interesting. I mean, certainly when it had to see what the Federal Reserve does, certainly their actions over the past few years since it began raising rates several years ago have been always been the focus of a lot of market commentary. And so State Street itself, it's one of the world's largest investment managers. It currently has roughly $2.8 trillion in assets, which puts it at currently about the third largest in the U.S. and the fourth
Mhm.
largest in the world. And so that's pretty incredible. And so how does State Street stand out among investment managers, and certainly have a wide array of products and funds, of course, that make this up. But what do you think is what are the key factors behind why State Street has been so successful?
I mean, I think part of it is, we're innovators with purpose. We
Mm-hmm.
innovated when we launched SPY, as well
Mm-hmm.
as other products like GLD, and then recently with SHE, our gender diversity ETF, promoting, more diversity within the boardroom.
Mm-hmm.
But beyond being innovators, we also are, craftsmen. We are
Mm-hmm.
crafted, these products that we have and offers and our solutions and strategies were crafted by experts. I mean, we've been in
Mm-hmm.
this industry providing asset allocation management
Mm-hmm.
for decades,
Mm-hmm.
as well as ETF solutions for a broad set of investors.
Mm-hmm.
And I think the last thing is really we're built with partnerships. We love to partner with clients and other people within the industry and companies. And this goes all the way back to when we launched SPY. It was a
Mm-hmm.
partnership with the Amex that really brought this product and really the ETF ecosystem completely to life.
Mm-hmm.
And these partnerships continue. I mean, even this past fall, we partnered with TD Ameritrade to bring low-cost core solutions to their clientele,
Mm-hmm.
and that's just another example of that. But
Mm-hmm.
overall, it really we couldn't be able to provide these without the skilled investment management teams that we have here at State Street. We are able to offer very skilled and precise beta solutions,
Mm-hmm.
as well as active quantitative equities, all the way to asset allocation management. So I think
Mm-hmm.
when I think about it, it's that innovation with a purpose, our partnerships,
Mm-hmm.
and the fact that we're craftsmen at delivering these solutions.
Mm-hmm. Yeah, and certainly it's been very impactful. I mean, you don't grow to 2.8 trillion assets under management without having something being done right. And so, and certainly with SPY in particular, I mean, it's been around for now, I believe, about 20 years and has
25,
oh,
actually, just
25. Wow.
celebrating
I mean,
25th birthday.
yeah, I mean, I think it was one of the first ETFs out there, and the fact it's I think the most popular broad-based domestic index or ETF is pretty impressive. I think what like
Yeah,
200 billion right now.
so around 250 billion. I mean, I
Okay,
think
wow.
from my perspective, State Street, we're the creator of the world's first ETFs.
Hmm.
So that goes beyond just SPY, but also ETFs in Hong Kong,
Hmm.
Australia,
Oh
and
wow.
our Pan Pacific Asian Bond Fund is
Hmm.
also an element of that innovation that we do bring to the marketplace.
Hmm. Yeah, certainly a very impressive record. And so on that point as well, so it was a so State Street is currently launching several new types of ETFs to focus in particular on high innovation sectors. And so at
Mm-hmm.
Tech Investment Insights, we focus a lot on technology in particular, and certainly the technology sector seems to not only been very impactful this past decade, but seems to be changing dramatically even more over not just this upcoming decade, but the next, say, like 3 to 5 years. I mean, who knows what it'll look
Yeah.
like exactly by then. And so, how do these ETFs like what is the goal here, and what do they offer that is new in particular? And so, what are they all about?
So, I think when we look at the evolving shape of our economy,
Mm-hmm.
how we live, how we work, and how we travel,
Mm-hmm.
we want to be able to provide solutions to investors that are able to harness that because it has an impact on every fabric of our society. You
Mm-hmm.
think of how we are able to transport from our house to work by hailing a car with an app.
Mm-hmm.
So, what we did is we partnered with an index provider, Kensho, and they have, a very
Mm-hmm.
deep background in data science and machine learning.
Mm-hmm.
They're able to leverage regulatory filings to figure out what companies are saying about their products and services
Mm-hmm.
to align with what we're obviously, adhering to is the idea of the fourth industrial revolution, the rise of artificial intelligence and more
Mm-hmm.
robotics and automation
Mm-hmm.
So you can capture things like smart transportation or intelligent infrastructure, because that, not to use a pun for smart transportation, but that's the direction of travel. You're having more
Yeah.
interconnected systems, and that is one area that could be a beacon of growth. If we just think about how the
Mm-hmm.
smartphone revolution changed, things like being able to drive around in the city in the backseat of a stranger's car and not feel
Mm-hmm.
in any danger. So,
Mm-hmm.
we really want to be able to provide those solutions to investors that can harness the next leg of growth, and really the idea of the fourth industrial revolution, where you
Mm-hmm.
have so many different elements of technology being fused together to
Mm-hmm.
really change the way we live, work, travel, and in every fabric of our daily lives.
Mm-hmm. Yeah, well, certainly it's going to be exciting next few years. And to clarify as well on those ETFs, so I know recently many ETFs have been engaging. Since the thing I think is a lot of exciting tech companies right now are still private companies. They haven't gone public yet. I mean, like Uber, as you were alluding to, has not
Mm-hmm.
gone public yet. Will those ETFs be engaging only in public securities or in private placement ones as well? Or is that
So it's an index based approach.
oh,
So
okay.
we
Uh-huh.
look at basically the universe is any publicly listed stock traded within the
Okay.
U.S.
Uh-huh.
But that's really where the constraints stop, because it
Mm-hmm.
really, to your point, the technology sector is being redefined on a daily basis.
Mm-hmm.
And what is new technology, but also what is contributing? What is that
Mm-hmm.
ecosystem to smart transportation? So
Mm-hmm.
I always go back to the idea of, within the smart transportation ETF we have,
Mm-hmm.
there's a company that was founded in the 1920s that built cars with Fiat Chrysler. So how can they be
Mm-hmm.
smart transportation? And I always go back to it that in order to be smart transportation, you need to have a car first. And so car makers are so much involved, and it's not just a firm like NVIDIA who is making
Mm-hmm.
these semiconductor chips within those cars.
Mm-hmm.
So I think being able to somewhat redefine
Mm-hmm.
the boundaries of what a sector will look like from a
Mm-hmm.
fourth industrial revolution perspective is really where we're headed. And I
Mm-hmm.
think we want to be able to align our products and services to the interests of our clientele and how they want to position their portfolios looking
Mm-hmm.
into the future.
Yeah, it certainly makes sense. I mean, technologies aren't just within one company themselves; they affect the doings of many companies. And so, yeah, it sounds exciting to look at it on a more interconnected level. And so, yeah, certainly
Mm-hmm.
the entire economy is going to be continue to be transformed as that moves forward. And so, for investors in this market currently who are looking at the horizon for the next few years, then, so what do you think they should most keep in mind, or like what kind of like methodology should they use? What should they think about when looking at this market or these upcoming changes?
Yeah, so I mean, I think I would say in the near term, some of the biggest things to really consider is how the traditional GICS taxonomy is changing in September. Where to
Mm-hmm.
even just our earlier conversation around the technology sector, those lines are being redrawn, where companies like Facebook and Google are actually being moved to communication services. So
Mm-hmm.
using that as a launching point, really knowing what you own and knowing
Mm-hmm.
if you're looking for a solution that can provide you exposure to the future of security, how
Mm-hmm.
we are defending ourselves from cyber security
Mm-hmm.
attacks, as well as, there's been so much work done on exploring how we could tap into the evolution of space and the militarized
Mm-hmm.
weaponry that could be used in space. So how would you do that? Would you just buy an aerospace and defense exposure, or would you actually look for a complete solution that is forward looking and dynamic and able to capture different elements of the future of security? So I
Mm-hmm.
think investors really need to think about how and why you would implement these into portfolios, and what is your true exposure that you're getting. So if
Mm-hmm.
you want something more thematic and more forward looking or dynamic, I think something like the new funds that we rolled out with Kencho, I think would be an ideal solution given the really unconstrained nature of them. They're able
Mm-hmm.
to redraw those boundaries and give you the exposure you might be looking for.
Mm-hmm. Yeah, it certainly makes sense. Every day in the news, we read about new hacks or breaches, and yeah,
Mm.
certainly there's a lot of business opportunities for companies and public companies in that sphere. And so one last question then, and so ETFs overall have seen a massive boom these past few years, especially these last 5 to 10 years or so. And so, what do you think is the cause behind this interest, this quote unquote ETF revolution, and
Mhm.
how do you think it's going to play out with the decline in interest relatively in active management in the future?
Yeah, I mean, I think a good portion of it comes down a little bit to cost and to some extent performance.
Mm,
So even if we're just looking in last year, 57% of all ETF flows went to what we would deem low cost ETF
mm,
solutions. This year, I think
mm,
we're around 75%. Some of that has to do with a little bit of mix shift, so to speak, with some of the higher fee strategies witnessing outflows based on some of the, they might be the more tactically traded.
mm,
But investors are looking to ETFs not only from that cost, but also performance. To your point,
mm,
active management specifically within the U.S. equity space has really
mm,
not been as robust as it had been in the
mm,
90s or early 2000s. So
mm,
investors are rethinking about how much they're paying for performance, and being in line with the benchmark at the fees that
mm,
are out there, I think is attractive. But the other part that goes to it is being able to allocate efficiently across
mm,
multiple different asset classes in a similar manner. The way you're able
mm,
to buy U.S. large cap equities with something like SPY, you could actually do very similarly
mm,
with to an emerging market debt fund. Same
mm,
type of experience from, for the most part, from a trading and allocation perspective. So
mm,
I think that's really what's brought on this evolution of ETFs and the increase
mm,
in usage. But we also can't discount the fact that it's created a whole nother ecosystem. I mean,
mm,
just even within our own family at State Street ETFs,
mm,
we we have roughly around 67% of the open options interest notional on ETF options. And those are very
okay.
complex trades that are being
Mm,
put on with very basic index-based instruments, and that's
mm,
really what the ETF ecosystem can bring, where
mm,
you can put on a exotic put call spread on regional banks while also
mm,
allocating to U.S. large caps for just 3 basis points.
mm,
So ETFs are really democratizing investing and being able to create efficient, flexible, and really tactical portfolio management.
mm. Yeah, definitely. So, I mean, we'll see many innovations in the technology sector as well as even in the financial services sector itself. And so, definitely very exciting times for the market. And so, thank you so much, Matt Bartoloni, CFA Vice President at State Street and Head of America's ETF Research. Thank you so much again for your time.
Thank you.